The Canadian Agri-Food Policy Institute is driving bold policy solutions for a resilient Canadian agri-food system and building a stronger future for Canadian agriculture. Visit capi-icpa.com to discover how.
Let's talk markets. Bring in right now Neil Townsend of GrainFox, based out of Winnipeg, Manitoba. How are we doing today, Neil?
I'm doing well. How are you?
Pretty good. Pretty good, man. We're going to talk about, I think we're going to focus a little bit on oil seeds here, mainly on soybeans and on canola. I guess what kind of impact off the hop here, Neil, is China playing in this market? Where we've got this deal with, or some sort of agreement between the U.S. and China on soybeans over the next 3 years. Canada's still trying to figure out a way back into that market. Is there demand there from China, or are they just out of the market, period?
Yeah, I mean, I think that's really the $64,000 question. Like when I look at the 25-26 marketing year, and people say to me, like, oh, what do you want to know about if you could go forward into the future? And what I'd want to know is just how many million tons of canola, and we're talking about canola right here, uh, is China going to import in the 25-26 marketing year? And to me, it's a whole volume issue, whether they get it from Australia or Canada, or, I mean, there aren't too many other choices than that, maybe a little bit smattering from Russia or Ukraine. I mean, the bottom line is, are they going to increase, decrease, or stay the same with imports? Now, if they stay the same with imports, like relative to last year, well, they got to get it from someone. So every ton they take from Australia, Canada would have access to another market to ship that to. Now, I think probably one grouping that might have less import demand year over year would be the European Union, because they had a little bit of a bigger crop. So that would be one tangible thing that would decrease the pool, but that's probably already built into the market. But the big question is, like, where will China be? So far, if we look at just visible purchases from China, I mean, they are not where they were last year, but it can come in one fell swoop. They can buy quite a bit. For all the noise about them buying from Australia, there's only three known cargoes, that they've bought from Australia. They're loading one right now. It's due to ship soon. This is the first time they've bought in, 5 years from Australia. So it is a meaningful thing. And it's not like a great development for Canada. But again, if Australia is going to concentrate on the China market, then Canada should be able to backfill lots of markets that Australia traditionally has been servicing over the last years. Broadening it out a little bit to the soybeans, I think on the soybeans front, I haven't heard too many people say that, the overall Chinese demand has been lacking. It's just that they've shifted, obviously, their demand to Argentina is probably the incremental one. That raw beans from Argentina was not a common thing, but now they're going to be taking a lot of raw beans from Argentina. But over the last 10 years, I mean, the big story has been a shift from U.S. beans to Brazilian beans, and that's going to continue. And then we'll just have to see if the overall number is 97 million, 101 million, or whatever. And obviously, the more the better, I guess, for grains and oilseeds markets, or the oilseeds markets. But I mean, it's going to be impossible to tell November 12th exactly whether we're going to have more or less beans bought from China. And what we will be able to say with pretty definitive position is that the U.S. will not sell as many beans to China in 25-26 as they did in 24-25. And that's something that is going to weigh on the markets.
Yeah, I'm finding in both Canada and the U.S., we're talking about Chinese demand as if China was at one time some sort of like loyal, consistent, stable sort of customer, where we knew every year they were buying X amount of product. And they're in and they're out, and the volumes fluctuate, but they're definitely not consistent. But we talk about them like they really are. And I think it's creating confusion about what China actually is when we think about the export market.
Yeah, I think you make a great point. I mean, I think, outside of soybeans, which soybeans has, since 2000, we saw very steady growth of their purchasing of soybeans up to, and over 100 million tons. And largely in the first sort of 15 years, that was mostly from the United States. And over the last 6 or 7 years, it's sort of diversified a bit, 50-50 from the US and Brazil. And now they've been buying products from Argentina. But other than that, and even in that area, I mean, you wouldn't call them 100% consistent. There's been some variances. And with things like wheat and corn and other crops and canola, huge amounts of variance. And on the canola front, I mean, we just got to call a spade a spade. Like they've been a difficult partner for Canada. I mean, this is at least the third time where we've had, significant obstacles to even get volume in there. And on other years, there's been sort of, big demand and then less demand and then big demand, then less demand. So, there are market fluctuations with them. It's not just a steady growth story. And, if you're saying to me, oh, how much are they going to import from Canada 5 years from now in 2030, 31? I mean, I would really say the range of guesses on that, and I call them guesses, would be pretty wide, like anywhere from, 0 to 5 million tons. And that kind of lack of consistency on the export side, where we really don't know what volume we're going to be dealing with in any given year. I mean, it's a difficult thing. And I think even the crushers, despite them building up and wanting access to all the supply, even the crushers, I think if you gave them an honest pill, would say like, that's not a very good situation, because it also makes it difficult for the farmers long term to really set aside and dedicate the acreage to canola that's going to be needed to support, say, 15 or 16 million tons of crush capacity, right? Because if they don't have that export outlet when they grow a 23 or 24 million ton crop, I mean, nobody wants to carry over 2 or 3 or 4 million tons of canola like on the farm, right? I mean, yeah, sure, we'll carry over a million and a half on the farm, but it's that extra 2.5 or 3 million tons that really make farmers pause and seek out different things that they maybe grow. And I mean, that's the problem with China. And I'd say like you can go down a lot of different crops for them and say, where is the consistency for that? I mean, spring wheat, fairly good, but I mean, again, it can fluctuate quite a bit, and they make such a difference in the market when they do come in and buy sort of that incremental 500 or 700,000 tons. But
okay, so knowing that, then is that why the U.S. is trying to create these production contracts where, hey, the minimum they're going to purchase is 25 million metric tons in the 26-27 year? Is that why they're going that route? And should Canada follow, or is Canada on the right path where, hey, just try to lower the market resistance and the non-tariff trade barriers, and the product's going to flow regardless if they need it?
Well, I would pick the latter. Like certainly, I just think when you think in theory as a primary producer or even like a line company, like the industry as a whole, you want to be shipping to consistent, steady growth demand. And I think that if it's done through an apparatus like, a 3-year deal or a 2-year deal, that just means you're back at the table renegotiating again. And also, it doesn't get to the root of the issue. Is like, is there a legitimate, steady demand there that's showing some signs of growth? Like, you don't want to really be focusing on a declining market. And that would be one, and we've talked about it before, so we're not going to go into it here, but I'd say one of the big question marks about China is like, what is the future of China? Is it going to be a growth market or a declining market? And I would be in the school that says, like, just looking at their demographics and their aging and all of that kind of thing, you'd say that's probably going to be a declining market unless they become a massive re-exporter. And they are a re-exporter on a lot of agricultural products or processed products, so that might be their role. But again, that wouldn't be strongly desirable for our crush industry either if they became like, we ship them 6 million tons only to face competition of, the fracked 6 million tons out in the world marketplace. That's not desirable either. So, I mean, I think that longer term, it would be nice to have China as a consistent, dependable, steady, predictable customer, even if the market isn't growing. But if it's going to be like this, where it's difficult to deal with them, it's tap on, tap off, hostile sort of relationship. I mean, I don't think that's very favorable. Now, I will mention yesterday there was a story in the South China Post where, and it was very China led, where China said a lot of nice things about Canada, encouraged us to come back to the table, encouraged us to make longer term deals and stuff like this. Like, in no way, shape, and form am I insinuating that in 25, 26 or 26, 27 or 27, 28, I don't want China to be our customer. We need China to be our customer. So let's get back to the table. Let's make a deal here. Let's try to smooth it out. I mean, if we could make a long deal, like a 10-year agreement about like, access to markets and stuff like that, that'd be even better. But at a minimum, let's try to solve the issue this year and let's ship 2 million tons of canola to China in 25, 26. That would be beneficial.
Okay, so yeah, when we look at the January future for canola and on a 1-year chart, we're up 2.33% from a pricing perspective. It does again, it's another example though where it's actually the input side of the equation, the cost side of the equation in agriculture that's creating a lot of the margin concern. We'd like prices to be higher and maybe more reflective of where the costs are, but it's really the costs that are really, really attacking farmers' ability to make a profit right now.
Yeah, and I think that's the story of the economy writ large is that like, the big issue on everybody, including farmers, is it's on the cost side, right? So, when you look at the profit function, it's always like total costs, total revenues minus total costs. And, even with the yields that we had this year on some crops, if you just multiply it by even like a slightly lower farm gate price, but the yield would maybe give you a higher overall revenue. But it's the costs that are really, really pinching people. And I mean, they're pinching the consumer, they're pinching the primary producer. I mean, I'm sure that if we talk to the line companies, they would say their costs are up and that, they're struggling. And, so I think like that's one issue. And I mean, I think historically speaking, when you talk about sort of economics, and I mean, we always talk about things in a vacuum or the free market and all this, but I think one thing that's very clear is that costs are sticky to come down. You know what I mean? So once you establish a new top price for a combine or for fertilizer or something like that, like it might come down, but a lot of times it comes down as a special, like where the list price stays the same, but people have to bargain for a better deal, right? Whereas with the commodity prices, I mean, the commodity prices trade and open, like now on computers, but I mean, that's the price, right? Like, and it gets to find its right price. But, I think farmers everywhere, are struggling with costs right now. And we're not at the stage where we've driven anybody aggressively out of business because nobody's identified themselves as the high cost producer yet. But if this continues for many more years, we're going to have to get to that situation.
Neil, really appreciate you joining us here today on Real Ag Radio. All the best to you. If somebody wants more information on GrainFox, where do they go?
They can just go to grainfox.ca and there's lots of information. I'm pretty sure they can sign up for a trial there. They can check out our AI. They can check out a bunch of other different things there. And yeah, just go to grainfox.ca. Thank you very much.
For the latest ag news, agronomic advice, and more, check out realagriculture.com and Real Ag Radio.